Hi everyone, welcome to today's live video. My name is May Doldalal. The blog is yesfinanciallyfree.com. And today we are discussing how to make your investments stable in all economic conditions. So I'm excited. This is advice from Ray Dalio. He's the founder of Bridgewater, a very successful hedge fund. He is very, very successful with money. So, hi Jack. I found about this from Money Master the Game, Tony Robbins' book. All right. So before I begin, let me tell you a little bit about myself. Hi, Big Joe. Hi, Costa. Hi, guys. Welcome to the live. Hi, Wraith. Welcome. Let me know your names and where you're from. All right. I'm live every day, Monday through Friday. My name, I told you, is May. I live in Honolulu, Hawaii with my husband, Jamel, and our 7-year-old son, Jordan. We just went for a run and workout this morning. Just came back. I'm invigorated. I'm excited to be here. I hope you're excited too. We're going to talk about a really cool topic. But before I begin, I used to have a lot of debt. In 2011, I had over $40,000 of credit card debts, and I paid it all off by April of 2016, improved our family's net worth by $500,000. New Jersey, welcome, welcome. And I was making almost $500 a month in passive income. I quit my job December 23rd, 2016 was my last day, and I started coaching clients in what I do. You can find out more about me at yesfinanciallyfree.com, which is the link in the profile. You can always swipe to the right, follow me. I always do great lives on information that will make you financially free as quickly as possible. So today we're going to talk about economic conditions and how to make your portfolio stable. So I read the book Money Master the Game by Tony Robbins last year, and then I listened to it about 100 times, literally, until a lot of it sank in. But basically, there is a portion of that where he highly recommends the all seasons portfolio. Why? Because the all seasons portfolio is pretty stable in all economic conditions. Now, people are worried right now. You know, there's this freeze on housing payments, right? In the United States, you don't have to pay your mortgage. If you can't pay it, they won't foreclose on you. But that's supposed to end maybe in November. And depending how they end it, people might not be able to make housing payments. And then you know what will happen to the economy, right? People can't live in their homes anymore. Not only that, unemployment, COVID, the elections coming up. What's going to happen to the stock market? You know, is it going to be Democrats or Republicans? You know, what's going to happen? Is it going to be another tank? So there's a lot of uncertainty and there's a lot of volatility. So a lot of people are worried. What about my investments? Are they going to crash again? Am I going to lose half my portfolio again or 20%? Or I don't want to deal with that, right? So how do you make it so your investments are stable in all economic conditions? Ray Dalio recommends you do the all seasons portfolio. Hi, Gubnozas, welcome. Hi, Sadat, welcome to the live. Nice to see you. The all seasons portfolio is created so that no matter what happens, whether there's inflation, when prices are going up and stocks and housing prices are going up, or deflation, when the opposite's happening, when stocks are going down, when housing prices are going down, and that's what people are worried about is deflation, yeah? When everything goes down in price, when there's increase in economic activity, and when there's a decrease in economic activity. Hi, Andre Spirits. Hi, Pasty Witter. That's why I have 4 sites. At least one is doing really well at any given time. Hey, that is super cool. What are your sites? Hi, Andre FT Wabu, welcome. So we have someone who's a business entrepreneur who has websites, which is pretty cool. Hi, Charlie, Haiti. Hi, welcome. Welcome, everybody. Where are you guys from? So, hey, what's up? So the all seasons portfolio is basically this. You put 40% of your money in long-term U.S. Treasury bonds. You put 30% in stocks, and these are all indexes, okay, guys? You put 15% in short, intermediate-term U.S. Treasury bonds of 7 to 10-year maturities, and then you put 7.5% in gold and 7.5% in commodities. All right, so that's the all seasons portfolio. Now, when I first read that, I was like, okay, and it averages 9.72% a year. All right, average. That doesn't mean every year is the same, but average out 9.72%. And the standard deviation is low, so the volatility is low. I think that's what he said. Basically, the volatility is low. So the lowest it hit was like -3 or 5%, and that's if you put in the Great Depression where everything dropped like, you know, over 50%. So in the last stock market crash in March, right? My son had all seasons portfolio, and his portfolio was only down about 5% when the whole market was down 50. They have gift types, items, 4 different niches from cute words, color stuff to bloody gothic. Interesting. He's telling us about his website business. That's cool. So if you put your money, according to Ray Dalio, right? He's really smart. You put your money in all those allocations and you balance it once a year. That means you make sure you have the same percentages. So if your stocks are worth more, you sell off stocks and buy whatever's not as much. So if your bonds went down in value, buy more bonds. And you rebalance every year. Then if you do that, you will average 9.72. Well, the average had been, doesn't mean you will. The average had been up to the point of the book published 9.72% per year with a very low standard deviation. High, low standard deviation. I don't know exactly how it worked. Basically, the volatility was low. All right. So you're not going to get those big, huge drops. All right. Those stomach wrenching drops where your money's like, oh my gosh, I just lost 50% of my money. You're not going to get that with the all seasons. And the key to it is balancing, putting the right percentages and balancing. All right. Now, you can have your financial advisor do it for you, or you can do it yourself. If you want to do it yourself, you will save the management fee you pay to your financial advisor. If you don't have a lot of money to invest in the beginning, it might make more sense for you to do it yourself. I have a program to help you do that. Now, financial advisors charge usually around 1% or more to manage your money. All right. So if you're investing $10,000, they're going to charge you $100 every year. I think that's 10. Is that 1%? 1%. Let me see. $1,000 is 10%. So yeah, $100. Yes, 1%. They're going to charge you $100 a year to manage it. All right. So that's going to take off 1 percentage point off your return every year with an investment advisor. Now, if you do it yourself, you can save that management fee every year, and it compounds over time. As your portfolio grows, it compounds and compounds over time. So how do you do it yourself? Basically, you take the allocations I told you and you invest your money that way. See, if you had $10,000, okay, what's 40% of $10,000? Okay, so that's $4,000, right? 40% of 10,000 is 4,000, right? Okay, you guys gotta get in the idea? Okay, so you would take $4,000 and buy long-term U.S. treasury bonds. And then you would take $3,000 and invest in stock indexes, all right? And then you would take $1,500, invest in intermediate term U.S. treasury bonds. And then you would take $750, invest in gold, and $750 to invest in commodities, all right? So that's how you would do it. And then every year you would check and make sure that the percentages, so you take the whole account value and you do percentage, and you make sure the percentage is the way I just told you. Okay, 7.5, 7.5, 15, 30, 40%. All right, so that's how you do it. Now, if you need help, if you're like stuck and not sure how to do that, then I recommend you take the program I'm creating. I just created it. It's in beta, and I'm launching it. It's going out this week. So it has a special low price of $197 to learn how to do this yourself, okay? Learn how to build it, balance it, video course with an office hour where you can jump on, you watch the videos, but if you have any questions, there's this online meeting place you can come on and you can ask me any questions to help you build and balance that portfolio. So if you have any questions during any time you need help, and the great thing about this is you will empower yourself. You'll build your own investment portfolio. You will learn how to invest in an all seasons portfolio, and you will know how to do that on your own, and you will save investment advisory fees. And you might not be able to find an investment advisor to do it for you either, because when I looked to find one, I couldn't find anyone who would do it for a good fee. The only person I could find was going to charge me $1,000 a year, no matter what my money I was investing. And so it was a huge fee for the money that I was investing. So if you're a small-time investor just starting out, or if you have some investment somewhere and you want to try something more stable, check it out. All right. The link is in my blog, yesfinanciallyfree.com. You can also go to the products page, DIY Build Your Own Investment Portfolio. $197 now for a limited time. It's going to be marked up to $297 when I'm done, probably this week or next week. So you have 2 weeks maximum to get that price. See you later. Take care. Subscribe to the YouTube channel. Aloha. And thank